makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Donald Trump is found guilty in the first criminal trial of a former U.S. president in the country's history. It could reshape the political landscape 5 months before Election Day. Well, French inflation accelerated for the first time this year, mirroring trends elsewhere in the region and coming just as the European Central Bank prepares to lower rates. And NATO foreign ministers meet in Prague as President Biden allows Ukraine to use U.S. weapons to hit military targets inside a limited area of Russia. So there is a lot going on, not only in politics, geopolitics, but of course, the world of markets. Quite a lot going on in terms of data that we're expecting a little bit later in the U.S. But we also had a data print, of course, in France that could make a difference to how bonds position future cuts from the ECB after loss next week. Now, stocks are trading a little bit mixed. Again, we have quite a lot of key inflation prints. In fact, this afternoon in the U.S., it's the Fed's preferred price growth measure. And a lot of traders will look through that to see for hints on the scope and timing of policy easing. This is a core PCE deflator, and it's likely moderated in April to the slowest month pace yet this year. Now, stocks gains this month have actually been fueled by a rally in tech, as well as the Fed Chair Jay Powell's dovish posture on rates at the start of May, so that could change. You can see S&P futures down 0.2%, European stocks practically unchanged. So onto politics, and Donald Trump has been found guilty in the first criminal trial of a former U.S. president in the nation's history. A New York jury convicted him on all 34 counts in his hush money case. Now, Trump, who faces as many as 4 years in prison, insisted the trial was rigged.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. But the real verdict is going to be November 5th by the people.
Let's get more on this with Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight. Tina, it was pretty incredible, actually, to watch. This is the first time that we have a presidential hopeful that's a convicted felon. Your first reaction?
Well, it was astonishing to watch. I mean, that response from President Trump on the courthouse steps, the clip that you showed didn't include the part where he said that mental patients were flooding across the border. It was a fairly unhinged rant, but it seems to confirm the idea that Trump did not expect to be convicted, let alone on all 34 felony charges. So even as much as we've kind of normalized the number of trials and the charges against former President Trump, it's still another thing to hear those words read out loud. And I think that it will be giving his backers pause for thought.
I was going to ask you, how do you think voters will react, actually, to this verdict?
Well, if we look at the polls that were posing this question, would you still vote for Donald Trump if he was convicted of a criminal charge versus a civil charge? He's been convicted of many civil charges. The latest polls, Marist and Quinnipiac, suggested 6 or 7 point potential drop. That doesn't sound like much. There will be those who say, is that it? But in a tight race, and this has been a very close race so far, within the margin of error, the two candidates are polling very close together, that kind of fall would be meaningful. But it is way too early to tell. We need to see fresh polling data taken after these charges have been announced.
So, Tina, how likely is that going to actually play out in the next couple of months? Again, we know that, Donald Trump is facing 3 other criminal trials, but this is likely the only trial that he'll face before the November election.
And that's important. So if we think about the news cycle and the timing, the signposts, the sentencing for these charges will take place on July 11th. The Republican Party convention will take place in Milwaukee starting on the 14th. I think that Trump will get probably a fine or a penalty, won't see jail time for these charges. And that's going to be significant. I think the judge's sentencing on the matter will have a lot to do with the trajectory. But for most, at least global investors, judging by the questions flooding into me, what they're asking is, will Trump still be the nominee? Answer, yes. Can he still run and win? Answer, also yes. As you said, the other trials are scheduled for later. So Trump's best hope is to push out all of these decisions until after November 5th.
But as you say, that Trump is potentially facing prison, or he could actually have a probationary term. Does what happened and what's decided on July 11th change voters' mind?
So that's what we need the new polling data to confirm. One of the things that is pretty clear, though, is that people who support Trump are most likely to continue to support him. But let's also remember the wild card factor in this election, and this is something I've written about a lot. Do independents, for example, throw their support behind RFK Jr.? Do people not turn up at the polls? When you've only got a few percentage points in it, these variables really matter. So I don't think we're going to see a big swing away from Donald Trump, to be clear. But we're going to be looking much more closely at these. Yeah.
Yeah, no, and just, to make it clear, I mean, he could legally, of course, campaign even behind bars. Does the Republican Party stick with him?
So I think that they will, because it's very late in the game. And, judging by, again, the anecdotal things I've been told, the RNC fundraising sites crashed last night with traffic, with donors coming in. So his supporters will stand by their man. It's the others in the middle who haven't made up their minds. And then when it comes to his very high-profile supporters, thinking of Bloomberg viewers, Steve Schwartzman, Bill Ackman, these people who've recently come out in support of Trump, this conviction, I think, raises the reputational risk for people like that in the financial services industry for supporting a convicted felon. But I don't think it'll stop them from doing it.
Why do you think not, Tina? Because there does seem to be, when you speak to a lot of Wall Street titans, they, in their mind, they put some of the question marks over Trump's personality in one category, but focus on what he do with the economy. Is that the right way of thinking about it? And how far is too far?
I think we've seen a remarkable ability for people in our industry and people in the American political establishment to ignore the less salubrious aspects of President Trump's personality, and this conviction, I think, will come under those same sort of set of rationale, because if he doesn't do jail time, which I don't think is likely, if the other criminal trials are happening afterwards, it will be a question of seeing what happens later. The Biden campaign has tried to exercise restraint in its remarks, and to talk about focusing on the president's record, President Biden's record in the economy and everything else. But again, the number of variables, the number of wild cards makes this race the hardest to predict or forecast in any of the 5 that I've been following professionally.
Tina, why do you think he won't do jail time? I guess there are security hurdles of imprisoning a former president, but also if he does go to jail, does that split American society?
Well, so let's look at the charges. These are white-collar charges. President Trump has not had a previous criminal conviction. They're fairly low level. So with that in mind, although the judge could opt for sentencing that would include jail time, my strong sense is that he won't want to go for that. Even a suspended sentence, I think, seems extreme. These are hush money charges, after all. They fall into the moral turpitude category. The other trials coming up could have a greater chance of jail time, but again, they're happening later. And what we've seen the Trump approach has been, over years now, is to play for time, to kick the can down the road and deal with things as they come up. This is a setback for the president. I think where we are outside of the United States, it feels more dramatic to us than I think it does to Americans.
Tina, thank you so much. Tina Fordham, their founder and geopolitical strategist at Fordham Global Foresight. Coming up, division at the Federal Reserve. John Williams says policy is restrictive, while Lori Logan says it's not enough. We'll dive into the thinking ahead of the PCE deflator later today. That's next, and this is Bloomberg. Well, Dell's first revenue increase since 2022 was not enough to impress investors with high expectations for the company's AI server business. Now, the stock has more than tripled in the past 12 months on AI excitement. You can see today Dell down some 14.1%. Now, investors are looking ahead to the release of the Fed's favorite price gauge. That's the core PCI deflator. We all have a favorite gauge for more clues on the path for interest rates. Now, we're joined by Madison, a global investment strategist at JPMorgan Private Bank. Also with us, Bloomberg's Justina. We do all have a favorite indicator, but this is actually a big one because it's all been so confusing in terms of what inflation goes next. Madison, what are you expecting?
I think it's important to look at inflation in terms of its different subcomponents, and I think there's been certainly a very promising trend when we saw the CPI print a few weeks ago, a bit of softening there. But I think what investors are still very concerned about is what happens with shelter inflation and what happens with labor market-driven inflation, so specifically that core services ex-shelter component. I think we're continuing to see promising dynamics from a leading indicator perspective, but what I think is causing some consternation is at what point in time do those leading indicators really start to filter through the data? So do you see the real-time rent measures start to flow through into the official shelter data? And do you see this dramatic rebalancing of the labor market that we've seen flow through into those softer wage numbers and flow through into those softer core services items?
Yeah, I mean, there's so much to actually unpack, Justina. What do you expect, I guess, market price? I mean, there's two things. It's what we're seeing in that kind of like inflation, breakdown, and then it's what the market interprets, which is not always the same thing.
Yeah, I think so far, if we look at what economists are projecting, they're overall expecting these numbers to give kind of policymakers a bit of comfort, a slowdown in personal spending, income, and in like what we call like the core PCE deflator, which is expected to be the slowest so far this year. But I think in terms of, market reactions, I think people are kind of happy to see any signs of disinflation. But in terms of like numbers to give Fed enough comfort to really move towards a cut, I think it's really still too early to talk about that.
What happens in all of this, Madison? I mean, do you still look at dollar or do you just look at treasuries?
I think you certainly need to look at both in terms of the market reaction, and certainly you also need to look at the equity market reaction as well. One thing that I think we've certainly learned this corporate earnings season is that inflation between 2 to 3% tends to be a bit of a sweet spot for stocks, in the sense that when we've seen historically headline CPI between 2 to 3%, that has tended to signal a one-year forward return for the S&P 500 around 15%. Similarly, when you see inflation below 3%, that tends to mean that equity valuations remain quite supportive. And so I think as long as we see a movement towards that direction, and that signals to us that the Fed is on hold but not reconsidering rate hikes, I think that this should hopefully be a comforting print for investors.
But I guess if you see this like global divergence, does it mean that there are opportunities but also a lot of volatility? The gravitational pull of the Fed, and I know there are various economies in different cycles, but it is still quite strong.
I agree. I think, we certainly are seeing a fair bit of global divergence when it comes to moving towards that path of rate cuts. So it's very different than the very coordinated global tightening that we saw throughout the course of 2022. And with that, certainly, I think opens up a number of opportunities in different markets. And so in the past, where it might have been much more of a story of U.S. exceptionalism, I think that there are certainly opportunities to leg into European markets, to leg into Japanese markets, just given this divergence that we're seeing across the globe.
And Justina, I guess the thing that's changed in the last 4 to 5 weeks is that also there's been measures of growth that have slowed in the U.S. And so when they cut, it's unclear what kind of economy they'll have.
Yeah, exactly. And I think it's kind of interesting because we've seen some signs of slowdown and maybe inflation still remaining sticky. So that kind of raises a question of whether a lot of these drivers, for housing, and for instance, isn't entirely just about demand. A lot of it is about kind of structural supply issues. But kind of another interesting debate is we've kind of heard a lot of Fed officials say, oh, maybe trends are so different now that the interest rate you need to kind of slow down inflation has actually shifted higher. And we've kind of seen kind of a split among Fed officials lately around that debate.
Madison, when you look at this kind of, again, this divergence we're expecting, or it's been telegraphed quite significantly, that the ECB cuts next week. But then we had that inflation print in France that's been higher than expected.
Yeah, I think it's something we need to keep in mind. I don't think that 1 month of data is going to deter ECB policymakers from pursuing that first rate cut next week. So I do think they go ahead with that, especially as so many of the ECB speakers have signaled that they feel quite confident in that path of inflation. That said, I think once we see a June rate cut, there is a debate and a conversation to be had around what that forward path from there looks like. It is possible we could need to wait a number of months before we see that, second or third cut from the ECB, given that really delicate balance between growth and inflation that really all central banks are dealing with right now.
Thank you both for joining us. Justina Lee and Madison Fowler from JPMorgan Private Bank. Both stay with us. Now we dive a little bit more into the euro area CPI data due out later today. That's next, and this is Bloomberg. Well, still with us to talk markets, Madison Fowler, global investment strategist at JPMorgan Private Bank, and Bloomberg's Justina Lee. So thank you both for staying with us. Madison, when you look at what we've heard from ECB in terms of policy, but also just the strength of equities and the valuations, the difference between AI in the U.S. and what we've seen in Europe, where do you find the best value?
It's a great point. I think when it comes to, U.S. versus Europe from a regional standpoint, I don't know if there's really a need to, express a preference for either. I think we're looking at really strong upside return potential for both markets at this point, and, for different reasons. But ultimately, I think it comes down to the fundamental corporate earnings strength that we continue to see. If we narrow in on Europe in particular, we continue to really focus in what we refer to as European national champions, which are multinational companies based in Europe, but are really leaders of their own industries. And those types of companies who are leaders across, AI and semiconductors, across luxury, across, weight loss drugs. We've seen, I think, tremendous growth and pricing power from those companies. And it's really been those firms that are leading Europe out of the earnings contraction that we've experienced over the last few quarters, and really just in these nascent stages of earnings growth recovery today.
And what do you do with UK assets?
UK assets, I think, it's a little bit more of a nimble story. So I think certainly in the UK, you have a different makeup of its market. It doesn't tend, to be as, heavily focused towards technology, for instance, as the U.S. is. You have a fair degree of higher exposure to China. There is, I think, a sense of perhaps feeling a little bit more neutral on UK equities, given that China is stabilizing, given that we're talking about Bank of England rate cuts. But I do think with the UK, it's very much about where you focus. And I think in particular, we really want to hone in on those quality companies, and especially some of those dividend payers, given that the UK offers one of the highest dividend yields globally.
And Justina, what do we do with China right now? We haven't quite seen the stimulus that we were expecting from them, and there's a bit of a slowdown in certain parts.
Yeah, I mean, data today was pretty disappointing in that it kind of showed the manufacturing PMI tipping back to contractionary territory. And this is already amid kind of a barrage of news, right, about kind of trade protectionism and kind of the EU and the U.S. kind of restricting trade with China. And so I think that's definitely painting a pretty negative picture. And you're really seeing that play out in the Chinese bond market, even though we've kind of heard a lot of warnings from the government about how you shouldn't just pile into bonds. They're kind of worried about the bond buying frenzy here. But the fact that it's still happening kind of shows sort of the pessimism about growth and kind of people really waiting for more stimulus there.
I mean, so what does that mean? I mean, the play, I guess, is what will it take for policymakers to step in and give more?
Yeah, exactly. But they're really kind of in a tough spot here because, we've been talking about how the Fed is not comfortable to cut just yet, right? And so if kind of China does aggressively ease a bit more, it could put more pressure on the yuan and on capital outflows. And that's something that they're definitely watching.
What's your take on China, or how do you play China?
I tend to agree with that. I think when we saw the rally, coming into this year quite strongly, it was one that we thought was fueled more by some technical positioning and not necessarily around enthusiasm around the growth picture or on the potential policy response. So we've had more of a cautious stance when it comes to that. And to get a little bit more excited from a broad perspective, I think you'd really need to see more of that policy impetus, or at least, the combined effort of those piecemeal efforts starting to really come through, even though you are seeing a sense of stability. That said, for a longer-term investor that wants exposure to some of these more exciting secular growth trends, we do like the onshore market within China.
Okay, thank you both for joining us. Our Justina Lee and Madison follower there from JPMorgan Private Bank. Plenty more to come on markets, but also on elections. This is Bloomberg. Donald Trump is found guilty in the first criminal trial of a former U.S. president in the country's history. It could reshape the political landscape 5 months before Election Day. French inflation accelerated for the first time this year, mirroring trends elsewhere in the region and coming just as the European Central Bank prepares to lower rates. And NATO foreign ministers meet in Prague as President Biden allows Ukraine to use U.S. weapons to hit military targets inside a limited area of Russia. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the EU heads to the polls next week for elections to the European Parliament, with some candidates warning far-right parties could make significant inroads. Now, joining us now from Paris is MEP Sandro Gozi. He is co-lead candidate for Renew Europe group. Mr. Gozi, thank you so much for joining us. What do you think is at stake for these elections?
Well, the future of Europe, this election is the most important election since 1979, because the scale of challenges we are facing, they are the same of those who were faced when we invented Europe. We got the war in the continent, in the Middle East. We are challenged by aggressive empires like China, like Russia. It is clear that we need a deep reform and a shift in the European policy. So all these issues are at stake in these very important European elections, I repeat.
There's a lot of focus in the election about the vote and the share of vote for the far right. Are you worried about a shift rightwards for Europe? And will then that translate into domestic policies?
Well, no, I'm not worried, because I don't do politics being worried. I'm determined to fight against the extreme right, because they do not have any project for Europe but destroying Europe. They want to weaken Europe from inside, and it is clear that to weaken Europe from inside is a very bad news also for the member state. So we must fight against the populists. They are not. They are scared to talk about Frexit or Italexit. They don't talk about exiting the Union anymore. But the project is conceived to block the European Union. It's exactly the opposite of what we need. We need to strengthen the European power and the European sovereignty. So it is clear that it is going to be a hard fight against them till the 9th of June. Then they are very divided among themselves. They cannot agree on anything on Europe, because each of them say Italy first, France first, Spain first. If you say every time Spain, Italy or France first, Europe come last.
But in France specifically, the national rally is expected to come first by a pretty long way. So what does this mean for the Macron government?
Well, they are always very high in the opinion polls, and they are lower in the real polls, in the votes. So, I mean, now we are focusing on further Europeanizing this campaign. This campaign is still focused too much on domestic issues, whereas we have to decide about the future of Europe. Bardella and Le Pen wants to have a revanche of 2022. Glucksmann wants to make us forget that he was the ally of the extreme left. We got 10 days to put at the center of the debate the real European issues, and we will see in the evening of the 9th of June what the real votes are and what the balances of power are.
So how can the EU actually address its defense challenge? Do you think there will be some joint debt?
There must be. This is our proposal. We propose a 100 billion euro to develop the defense industry, and we want to finance this plan for the defense industry with Eurobond. It is a strong proposal by Emmanuel Macron, by Kaja Kallas, by the Renew Europe Commissioner Thierry Breton, and we think that this must be the highest priority in the new term, and we think that the success in the functioning of the next generation EU, of the European Recovery Plan, show the way ahead, and we must go along that way.
So is Europe taking the right approach to China?
I think that we have started in the last term to take the right approach to China. China has been very aggressive. China violates the World Trade Organization rules. China has made some predatory investment in Europe. We start to work around the principle of reciprocity. We start to screen the investment from China. We start also to respond to unfair foreign subsidies for Chinese companies. I think that, of course, China is a big reality, is a big economic and trade reality, but we must give ourselves the means to come back to a fair trade. With China today, the trade is unfair. We are in favor of free trade, but we want also a level playing field which is respected by the two parties, and the Chinese are not respecting many of this.
Can you also talk to me about how you see the green transition and whether you think the EU should actually pick up spending for the EU transition, maybe even rival some of the Spending and Inflation Reduction Act in the US?
Well, I think that the green transition is a fundamental industrial and societal choice. There is no time for green fatigue or green backlash. We have elaborated the strategic policy and legislative framework. Now, as you rightly were pointing out, we have to focus on the resources. Already 1/3 of the recovery plan of the Next Generation EU is devoted to the green transition. We have to continue also to create own resources, new own resources for the European Union, like we have done with the carbon mechanism at the external borders of the Union, or with the reform of the emission trading schemes. And we have also to go beyond the 1% dogma. You know that the budget of the European Union is still only 1% of the global European wealth. It is a budget which has been conceived in 1988. I cannot even remember what I was doing. I think I was at the high school. Before the fall of the Berlin Wall, we have to fundamentally reform the European budget for the green transition, for the technological innovation, and for defense.
Sandro Gozi, thank you so much for joining us. Of course, he's MEP co-lead candidate for the Renew Europe group there on his thoughts on the EU elections coming up from June 6th to June 9th. Now, the South African rand has dropped more than 2% yesterday after projections of election results showed the ruling ANC falling well short of parliamentary majority, leaving it to seek a coalition to retain power. Well, Bloomberg's Jennifer Zabazaja is at the National Results Center in Midrand. Thank you, Jen, for joining us and for some great reporting throughout the week. So just over 51% of the votes have now been counted. How's it looking?
Right, Fran. We're at just over 57% of the vote, about 8 million votes that have been counted. And as you mentioned, this is looking and it's tracking like the ANC is going to fall well short of that 50% threshold that they were hoping for to retain that parliamentary majority. And really the second half of this story that we're all following closely here is just how well former President Jacob Zuma's MK party is doing. And really at the expense of the ANC, we are seeing the MK party right right now, tracking as the third biggest party here in South Africa, behind the ANC and the Democratic Alliance, the main opposition party. So now the question is, what do some of these other more populous districts throughout the country look like, in particular here in Gauteng, which is, of course, home to Johannesburg, the economic hub here in South Africa. Potentially, the ANC could claw back some votes there, but most of the projections that we're looking at is seeing that potentially the ANC is going to, for the first time in 30 years, fall well below that 50%, potentially looking at even 40 to 42%.
Jen, thanks so much. Jennifer Zabazaja there with the very latest, of course, on South Africa. Now, coming up, President Joe Biden allows Ukraine to use U.S. weapons to hit targets inside Russia. That story is next, and this is Bloomberg. Now, the conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. President Biden will allow Ukraine to launch U.S.-provided munitions against military targets inside a limited area of Russia. Now, the decision marks a significant shift from the White House, which had earlier resisted calls from allies. Now, for the latest on the ground in Ukraine and Western support, let's bring in Bloomberg's Mark Champion. Mark, this seems like a very significant development. What do you make of it?
Well, it's been a long time coming. I think there are a few things to say. The first of all is Ukraine has been hitting Russian targets, within Russia for quite some time. They were limited as to what they could use. And the Americans have now said within a certain area, as you mentioned, across the border from Kyiv, they can now use U.S. weapons. But the U.S. has also limited what the range of the weapons that they can use. So they can use HIMARS, but not ATACMS, for example, which, again, I think, will be welcomed in Kyiv, but it's not entirely clear it makes a huge amount of sense because essentially what will happen is that the Russians will, pull their artillery back or their missile launchers back. Out of range of HIMARS. So, we'll probably be back here having a similar discussion again.
But, Mark, it feels like a significant escalation in tone.
Well, it is, but it's. I would put it more as another step in what has been a very incremental process from only providing javelins back at the beginning of 2002, anti-tank weapons, and saying absolutely not to tanks, to aircraft, to long-range weapons or artillery, and then step by step. Moving through all of those taboos. And this is really just the latest taboo to be broken.
Mark, we're focusing so much, of course, on what's happening in the Middle East. Is Vladimir Putin taking advantage? There were a number of reshuffles or appointments also under the guard and very close to him. What do you think? Does that change as the world is distracted elsewhere? Does that change on how Ukraine is doing?
No. So Ukraine will always be Putin's number one priority. In fact, his number one, number two, number three. So Gaza, I think, is extremely useful to him in distracting Western attention, in stretching U.S. Defense capabilities in the sense that it also needs to supply Israel. And so it's very useful to Putin, but his priority is absolutely Ukraine. And so it's, there's no upside for Ukraine in the sense of what's going on in Gaza, unfortunately.
Mark, is a ceasefire between Israel and Hamas much further ahead? I know there's been international pressure. You wrote a column saying, look, Israel will always be held to a different standard. And yet more world leaders are really asking for things to de-escalate, especially in Rafah. Where do you see this going in the coming weeks?
Well, I think the tension is becoming very, really intense. So there's an immense tension between, Benjamin Netanyahu's determination to see it through in his campaign as he sees it in Gaza. You had an Israeli general the other day saying, we think it'll take us another 8 months to finish off Hamas in Gaza. But the tension, the sort of pressure that's building on Israel to stop and to accept a ceasefire, to get a deal, to get the hostages out. Domestically, there's a lot of pressure building on the hostages, and abroad, and a lot of pressure building on, just getting the fighting to stop and the civilian casualties to stop. So I don't know, how long that tension can sustain and what will give at what point, but it is really becoming very intense right now.
Mark, thank you so much for all of that analysis. Mark Champion there from Bloomberg Opinion. Meanwhile, Russian gains in Ukraine are fueling fears about Moscow's intentions, particularly in the Baltic region. Now, Bloomberg Markets Asia anchor Haslinda Amin is at this year's Shangri-La Dialogue in Singapore and spoke with the Lithuanian Prime Minister Ingrida Simonyte on EU support to Ukraine.
We see that the determination of the country and of the nation to fight back for its sovereignty and territorial integrity is there. It was there despite of the doubts and problems we were having on our part with provision of particular weapons or further support, with debates in Congress about the support package for Ukraine that finally was adopted. So we know this is there. So what we need to do, we need to provide Ukraine with all the help that we can. And on the other side, we need to reduce the capacities of Russia to continue the war with sanctions, with restrictions to gain money from the democratic world to finance this brutal war in Ukraine.
You talk about how you need to give the assistance that Ukraine needs. Quantify that for us. Who should it come from? Are you talking about what the U.S. can possibly do?
Well, the level of support so far, the military support, differentiates very much across the countries. For example, for Lithuania, this is a number that ranks 1% of GDP, I think. But you can imagine that we are a small country, so even 1% of GDP for us is not a huge number in terms of actual nominal value of the support. Then when we compare what other countries are doing in terms of their capacities or in terms of their GDPs, the ratios would be significantly lower. So there were different calculations saying that if everybody is providing at least 0.25 or 0.5% of their GDP in the democratic world, then that would do a very big difference to what it is there. Because now it looks like smaller countries tend, of course, and this is natural because the ratio, it is a ratio that is calculated based on the value of ammunition or weapons to the country's GDP. In terms of the volumes, of course, US and Germany are providing big amounts of the support, but I think each and every country can do more. Sincerely, just look at what is doable and do more.
Lithuania is mulling training troops on the ground. What's the thinking behind that? Is it something that Ukraine has asked for?
Well, this is a long-standing exercise where we train the Ukrainian soldiers. We've trained them before this invasion, and this is a long-lasting cooperation between our military forces and Ukrainian military forces. And we train them in the third countries. We train them in Lithuania. If need may be, we would train them also in Ukraine in partnership with other countries who would be willing to do so.
At this point in time, how are you assessing the prospects of a win for Ukraine?
Again, it depends, I think, largely on us.
The war has gone on way longer than people anticipated. We're into the third year.
Yeah, because along the way, we are in the third year of this invasion. Along the way, there were more than needed episodes of hesitation in democratic world about whether we can provide, whether Ukraine can withstand this. We were never in doubt. We were always certain that Ukraine will fight back, and all that we need to do is to provide Ukraine with all the support that is there.
That was Haslin Amin there with the Lithuanian Prime Minister. Now, coming up, OPEC Plus is said to be working on a deal ahead of the group's meeting this weekend. So we'll bring you all of the latest details next. And this is Bloomberg. Now, OPEC Plus delegates have told us the group is moving closer to an agreement on oil production cuts that may actually stretch into 2025. Now, let's get more on the story ahead of Sunday's meetings with Bloomberg's Jumana Bersace in Dubai. Jumana, a lot of focus, of course, on oil demand and some of the spare capacity that OPEC Plus has. What are we expecting for this weekend?
Good morning, Fran. That's right. So I think the big surprise here is that Bloomberg is reporting that they may be looking at extending those production curbs to 2025. The market was pricing in an extension perhaps until the end of the year. But I think what's important to note here is that this is a reflection of how OPEC Plus producers are looking at the demand and the supply outlook for the remainder of the year. You talked to a couple of factors there, namely spare capacity. There are many producers within OPEC who are still sitting on plenty of capacity, the likes of Kingdom of Saudi Arabia, UAE, no way near producing at full capacity. So that extra capacity is going to act as a buffer. They're also keeping an eye on non-OPEC supply. You look at how much production is coming out of the U.S. U.S. inventory sitting at the highest level since last July, production coming out of Canada, Norway, even Guyana bringing on new oil fields on stream. All of that is impacting the supply outlook. From the demand perspective as well, you've got to bear in mind that even though the IEA are still penciling in oil demand growth to continue, it is at a slower pace than what they were anticipating 1 year ago. And you've got to think there that Asia and perhaps the demand from China is impacting. And then finally, Francine, you also need to take into consideration compliance within OPEC, because there are many countries who are not actually adhering to these voluntary cut targets. And depending on whose data that you look at, they are overproducing by the tune of 500 to 800,000 barrels per day. So it's all very fine and well for them to say that they're sticking to these voluntary cuts of 2.2 million. But in reality, compliance has been quite low, which means there has been more supply coming to the market than OPEC would like to see, and probably one motivation for them to extend these cuts to the end of the year.
So, Jumana, when you say, and this is exactly what analysts are telling us, that the group is widely expected to extend these so-called voluntary curbs, and when you look at the complex of the members of OPEC, is there anyone that would benefit? Of course, if you have some voluntary curbs, then you could press the price of oil up at the margin, and so that means that you're pumping less but actually getting more. It's a tricky situation. Who would do that?
It is. That is exactly it, Francine. So when you think of the perspective of Saudi Arabia, for example, even our own Bloomberg intelligence groups have put out reports suggesting that the break-even rate for them is north of $100. So the calculation for Saudi, which is obviously the main swing producer within OPEC, is are they willing to give up market share in order to support prices? Because the alternative is, let's say they pump at full capacity, 11 million barrels per day, but at a much lower price, in which case everyone pays the price for that. So what they're ultimately trying to do is to put some support behind the market and to keep oil prices roughly where they are, around $80.
Jumana, thanks so much. Jumana Bersace there in Dubai. Now, this is what the picture looks like for some of the stocks we're watching. For example, corporate Dell shares pre-market down 13%. Up next, a Bloomberg Brief with Danny Berger and Manish Krani in New York. This is Bloomberg.